What is up, my Forex for Beginners family? Okay, so now we're going to continue part 2 of market structure, Fibonacci, and break of structure. So part 2 is drawing fibs in a downtrend. Okay, so we were mapping the uptrend. It was making a higher high, higher low, higher high, higher low, higher high, higher low. We were expecting a new higher high, but that didn't happen, right? And then that's when we started talking about break of structure. Break of structure is when the direction changes. So if you see here, we made a higher low, and I drew a vertical line right here, and we were expecting a higher high to form based on, or previously we were making higher high, higher low, higher high, higher low, and we're expecting it to continue making a higher low, higher high, until we see something change. And we did see something change. Instead of making a higher high, it made actually made a lower high. See how this high is lower than this one? And that's okay. Price could bounce up and down in here as long as it doesn't surpass this previous higher low, then structure hasn't broken. So let me go back to this drawing up here. Okay, so if price retraces to point C, and we talked about it, so point A is the starting point, point B is where the impulse wave goes and stops, so that's the 0%. So when we draw fibs, is from point A to point B, and then we're measuring the retracement. That's what Fibonacci retracement is. And point C is always the retracement. So the retracement can go to here, 23%, 38%, 61%, 78%. It can go all the way back to 100%. See this? This is why it's 100% retrace, because the starting point's A and it went all the way to B, and if it retraces all the way back to the starting point, which is 100% retrace, that's why I say break of structure is 100% retrace. So if it surpasses 100%, that's what we call a break of structure. Break of structure. So that's when we draw a vertical line and we label break of structure because it surpassed point A, right? But if it doesn't, even if it comes all the way to 100% and continues upward from here, then structure is maintained. So no break of structure as long as it doesn't pass 100%. So it could come up here, drop back here, and then go to point D. Sure, that's all good. But as you can see, it did not surpass point A, so structure was not broken, right? That's what I want you to understand. So it can float around here as long as it doesn't break 100%. The minute it breaks 100%, it goes past point A. I want you to label it as break of structure, draw a vertical line, and when structure breaks, that's the first sign of a trend change or a direction change. So let's go back here. So it was making a higher high, higher low. We were expecting a higher high, but that didn't happen. It made a high here, and then see right here, it made a lower low. See how these wicks are further than this previous higher low? Well, this in my mind is a break of structure. Break of structure right here. So we're going to put a vertical line, and now we start looking for a trend direction change, and look what's happening. So just go ahead and label it lower low, and let me copy this. Now it's making a lower high, and then price really started to drop, and then it made another lower high around here. Call that lower high. And then it continued to make a lower low. So just based on we were expecting a higher high, that didn't happen. It actually made a lower low than this previous higher low. So this is where break of structure happened. We label it, and then we see that it started making a lower high, lower low, lower high, lower low, lower high, lower low. So once we notice there's a break of structure, then we can start measuring Fibonacci on the downtrend, and that's what we're going to cover now, drawing Fibonacci in a downtrend. Okay, so I'm going to jump back to this drawing because I love this drawing and it really simplifies market structure. So again, we were making higher highs, higher lows, higher high, higher lows, higher high, higher low, and then something changed here. We didn't make another higher low. We didn't make a higher high, but we're trapped in this area. And then as soon as we surpass this previous higher low, which is also one, if you put Fibonacci here, this is point A, point B, point C. Point C right now did not surpass, but when it went up again, as soon as it broke this previous higher low, this is where the break in structure happens, and I need you to know this. And once that happens, then we can start measuring the Fibonacci downtrend, lower high, lower low, lower high, lower low. So let's go back to this drawing. So we had a break of structure here. Price came up, made a lower high, lower low, lower high, lower low, lower high, lower low. So next question is, how do we draw Fibonacci in a downtrend? So I'm going to use the bar replay tool. Here we're going to hit jump 2 and say here. So to draw Fibonacci, we're going on a downtrend. Like I said before, starting point is where we start our Fibonacci. So point A, point B, point C is the retracement, then point D is the extension. So I'm going to draw Fibonacci right here. I'm going to draw it all the way down to here. Oops. Now I'm going to hit play on the replay tool and see what happens. Okay, I'm going to pause it there. So let me kind of zoom in here. So you can see point A was our starting point. This was point B. So we had this downward motion. We did have this little bit of retracement here, but because it moved fairly quickly, I just put point B here, and we're measuring Fibonacci from point A to point B. Point C. Point C is also the next lower high. And if you look, we retrace to the sweet spot, 78.6 and 61.8. So when we see it hit the sweet spot, we can place a sell opportunity. This is where we would sell. And I'll show you later how to place a sell trade and how to enter. But for now, for simplicity, say we at point C, the retracement, we decided to sell, and as price went down, it actually hit take profit 2 and eventually hit take profit 3. So let me just draw some arrows here. So it went up like this, and then it started making a lower low, a lower high, a lower low, made actually a lower high here. This is the lower low. And then it made more lower lows. So there you go. So So you see here, after we identified a break of structure, we realized that it started making a lower low. It surpasses higher low. We labeled the break of structure, and then we started looking for a downtrend to form. And the downtrend, I'm going to show you different examples of break of structure because before it broke out of this zone, it was actually kind of floating in between this area here. And this is, like I said, we can call this consolidation. But as soon as we see any sort of slight break of structure, we want to start looking for a possible trend reversal. And we did eventually see that. See, we started making lower low, lower high, lower low, lower high, lower low. And when we're running Fibonacci on a downtrend, I want you to know that when we change directions, then Fibonacci, our starting point, because we're now measuring a downtrend, this is now the impulse wave. So this downward motion here, impulse wave, retracement, impulse wave, retracement. So once we start making lower lows, let's just continue using Fibonacci. So I'm going to use the replay tool again. So this little bar replay is the replay tool once you hit it. But I've already done it, so right now I'm just going to hit the jump to. Let's hit the jump to button, say here. Okay, so say we decided to sell here. We had measured fibs from here to here. We measured the retracement, and now price is going downward. So let's just hit play. Okay, so we see price go downwards, and now we're wondering, okay, we're seeing a bit of support here. We're starting to think about this next lower high. And what is this next lower high? Well, this is a retracement. And so again, when we're going to measure the next wave, so this was the impulse wave, retracement, impulse wave, retracement. So now that we're wanting to know about this retracement area, so what do? We have to move our point A, point B, point C, and point D. So because this is the new impulse wave, it's going to be our point A. This is going to be our point B. This is going to be our point C. And this is going to be our point D. And then we draw fibs. This is how you draw fibs in a downtrend. So you can try wick to wick. So draw it from wick to wick. See how it looks. Or I sometimes go base. See how there's a nice level here. So I sometimes go base to wick. And some people, like I said, some people do base to wick, or some people do wick to wick. What I suggest doing is trying both of them and seeing how it fits. Fibonacci is one reason to buy or sell. We're going to have multiple reasons, but for this example, we're just going to go base to wick, and we're now looking for the retracement point C. So I'm just going to hit play and see what happens. So this is a good example. I was going to see point 4, drawing Fibonacci when retracement is less than 23.6%. So this is something I want you to know. So see how we started drawing Fibonacci from point A, went to point B, it retraced to point C, but you can see it came to 23%, 23.6%, and it found resistance here. So whenever you see 23.6%, most likely the downtrend is going to continue because it wasn't able to break even the first level, 23.6%. So that means there's so much downward force that most likely the trend will continue, and you can see that looks like that's what's going to happen. So let's just hit play. and price quickly dropped. So now we're going to delete Fibonacci here. We're going to move this out of the way. So it was making a lower low, lower high, lower low, lower high, and then it started dropping really quickly. I guess we can label this as a lower low, this as a lower high over here. And we'll just label this as lower low. So now, say we sold from here. This was the old point C. Say we sold from here. We drew fibs. Let me just draw it again. So point A, point B. We see that price came to 23%. It formed a resistance here. Then we got a bearish engulfing candle. Bearish engulfing means this candle. Bearish means down, bullish means up. So bearish engulfing means this downward candle, or this downward candle engulfed this candle to the left, and it was at 23.6%, and price continued down quickly. And then it hit our take profit 2, take profit 3. And let me just delete this Fibonacci, and let's measure the next Fibonacci level. So we're down here now. Let me use a replay tool just to clear this up a bit. Okay, so this is the new impulse wave. We're wondering about retracement now. So we haven't seen any retracement yet because price is moving really quickly down. So we're just going to hit play and wait till we see a new lower high. Okay, so you can see here, from here, it went down to this lower high and then had a decent retracement here. So let's just draw Fibonacci again. So right now we're just practicing drawing Fibonacci on a downtrend. So I'm going to bring my Fibonacci tool. So we made a lower low, lower high, lower low. So this is a new impulse wave. New impulse wave. It's going to be point A is our starting point. Point B is where the wave kind of slowed down or stopped. Point C is our retracement. And then point D is our extension. So again, we're just practicing drawing Fibonacci on a downtrend. So point A, we're going to start. We're going to draw it here. So we went from base to wick. And now we're looking at the retracement. I'm just going to delete this. So where did it retrace to? So this time it came to 38.2. And then we had this big bearish engulfing candle. What you can do is when you see it finds resistance at 38.2 and it started printing this big candle, you could have sold here after this candle just started to engulf this candle. You could have sold here. Let's label this. This is point C. Again, point C is always the retracement. It retraced to 38.2. It tried to surpass it. It closed here, and the next candle got slammed down. So say we sold from here. Just going to delete this. And then again, point D is our target. And again, just based on Fibonacci, point A, point B, point C is our retracement. It retraced to 38.2 in this example. We could have sold here, which was the next lower high. We're always selling on the retracement. and our target is point D, which is take profit 3. So again, you can see that how we use Fibonacci. We use Fibonacci in the uptrend. Then when we identify a break of structure and we identify that the trend has changed direction and we're making a lower low, low high, lower low, so the direction is now downwards, then again, all we do is place Fibonacci in our downtrend. So the main goal of the last 2 lessons was I wanted you to know how to map a uptrend. I wanted you to know how to identify a break of structure. And then I wanted you to be able to draw Fibonacci on every impulse wave down, and then try to join the trend on the retracement. And the retracement is always point C. So let's jump back to this drawing here. Okay, so we were making an uptrend. We found resistance here. We broke structure. We marked it, the break of structure. Then we started to see it forming a lower low, lower high. Many times it comes back and retests this area, so we could have joined the trend here. We could have sold here, and we could use Fibonacci. This would have been point C as a retracement. Then we had another impulse wave down, retracement. This is point C. We could have joined the trend here. Then the impulse wave down, retracement. We could have joined the trend here based on Fibonacci. Again, this would be our starting point again, point A, point B, point C is the retracement. We could have joined the trend here. And then again, this is point A, the impulse wave down, point B, point C is the retracement, and we could have joined the trend here. Okay, so let's go back to this drawing. So we're just going to keep hitting play on the replay tool, see what happens. So price is falling, falling, falling. Okay, so let's see what's happening here. So I'm just going to remove point A, point B, point C, point D. So this was a pretty good sell. It made a significant lower low. So again, this is the new impulse wave. So say we closed our trade here. We're just going to delete this, delete this. So it's making, again, all it's making a lower low, lower high, lower low. This is the new point A. This is the new, this was the retracement, but now this is the new impulse wave. So impulse wave down. This is going to be point B. Now we're looking for point C, and point D should be somewhere down here. This is what we're expecting, but always remember, right? At any moment, we could have a break of structure. But let's see what it shows us. So we're expecting it to make a lower high somewhere around here, and then continue downward. So we're expecting something like this. And then from there, a downward motion, unless structure breaks. So let's draw our Fibonacci. So from here to about there. So I went from base to wick. And I'm going to hit play on this tool here and see what happens. So point A is the start of the impulse wave. We got to push down, the impulse wave push down. This is point B. We're going to draw Fibonacci from point A down to point B. This is the lower low. And let me delete that, I have too many. So lower low, point B. And now we're just watching the retracement. Retracement went all the way up, all the way up. So it was kind of floating, came back down and hit it hit 88.6. So it surpassed our sweet spot. And again, remember, structure isn't broken unless it goes past the last lower high or 100% retrace, and it did not. It went to 88.6, and now it's starting to show a little bit of resistance. This is now, we're going to label it as a lower high. And let's just hit play and see what happens. So you can see price exited the it fell back into the sweet spot. Price fell back into the sweet spot and traveled downwards. We could have placed a sell trade here, and I'll show you later how to enter trades. But again, all we're doing is learning to place fibs on our chart, Fibonacci, and look for the retracement to point C. And then from point C, we try to figure out where we want to sell. And then point D will be our take profit. Point D is our take profit. And we're just going to hit play again and see what happens. We did hit take profit 1. Okay, so let's pause this. So we did come pretty close to take profit 2. So you can see that from here, from point C, which was the retracement, we had a downward motion. I'm just going to delete this sell. We hit take profit 1. We were just shy of take profit 2. And then you can see here, let me just continue drawing. Let me just copy this. This is the new lower low. This was a lower high. This was a lower high. This was a lower high. And then you can see right here, structure broke. So I'm going to delete Fibonacci here. So as soon as break a structure broke right there, we can label it break a structure. How do we know it's a break a structure? Because price was traveling downwards. It was making a lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then it retraced and broke this lower high. We labeled it as break a structure. And then price took off. Let's bring it back to here. So hit play. Price broke structure right there. So we're going to label point A here. So there's a break of structure. We label this as point A. This is going to be point B. This is where we see some sort of resistance here, and we got this downward candle. We don't know where point C is going to be, and point D is the take profit. So we're just going to hit play on the replay tool here and see what happens. So we can see retracements happening. So what we can do is we can draw fibs from point A to point B. Point C is approaching our sweet spot. And let's just continue. So you can see that it spiked to about, let me just fix this. So it spiked to, so I just moved it from base to tip. We can see that it came pretty close to spiking, or 61.8. You can see that there was a bullish engulfing candle here. We could have placed a buy after this bullish engulfing candle. So I'm just going to put buy here. And let's see if it hits our take profit. It's already at take profit 1. Let's see if it continues up. Take profit 2, take profit 3. So you can see that just going back here, we went from an uptrend, we had a break of structure. We went from a downtrend, we had a break of structure. Now we're in an uptrend. So I'm just going to go back to this drawing. So again, we were in an uptrend, there was a break of structure. Now we're in a downtrend, there's a break of structure. We're in an uptrend, there's a break of structure. We're in a downtrend. So the whole point of this training is to be able to identify when there's an uptrend, be able to label the higher highs, higher lows, higher high, higher lows, to be able to identify when this previous higher low is broken. We label it as a break of structure. We start looking for a trend reversal, and we saw a lower low, lower high, lower low. We start drawing fibs from each point A, point B, point C, point D. The last lower high, which was point C, becomes the new point A when we're drawing Fibonacci again to try to join the trend again on this next retracement level. And we continue mapping. We continue mapping price as it moves using Fibonacci until we see another break of structure. See the lower high, lower low. It broke this level. We label it as break of structure. Now the new point A is here. Point A is where we start Fibonacci. Point B is where the impulse wave stops. We start measuring the retracement. And point D is our take profit. So there's a nice recap of the second point that I was trying to teach here. So drawing Fibonacci in a downtrend. And then the next section, I'm going to show you more examples of break of structure, because every break of structure, it looks a little different, but it's the same concept. You know, if it breaks this previous level, we're looking for a trend reversal. Same thing here. It broke this previous level. It retraced. It went from down. It went back up 100%. We label it break of structure, and then we start measuring fibs in an uptrend. So I want you to practice these two skills. You want to be able to draw Fibonacci in an uptrend, and you want to be able to draw Fibonacci in a downtrend. And as price moves down, so you have the impulse, you have the impulse wave retracement, impulse wave retracement, and you got to be able to draw Fibonacci on every impulse wave retracement. All right.